Welcome to another S&P 500 Trade Watch analysis video. Today is July 27, 2022. Today, the Fed announced another 75 basis point or 0.75% rate hike, and the S&P 500 along with the rest of the market took off. This is two consecutive 75 basis point hike, and Fed Chairman Powell stated in his press conference that the 75 basis point will continue until he sees strong evidence that inflation is coming down. So why is the S&P 500 moving higher on the backdrop of continuing interest rate hike? Is this the beginning of a new uptrend or just another dead cat bounce? In this video, we'll analyze the price action of the S&P 500 ETF, the SPY, the NASDAQ 100 ETF, the QQQ, and the Russell 2000 ETF, IWM. Then we'll look at the two heavyweight FANG stocks that are scheduled to report earnings after tomorrow's market close, and they are Apple and Amazon. So stay tuned. Before I begin, be sure to subscribe to this channel if you like the contents and want to see more of these videos, and smash the thumbs up to help me promote this video on YouTube. Let's start with the SPY, the S&P 500 ETF. On this daily chart, we see that it came up and did this gap fill here and poke its head above this declining trend line. Remember, there was this upper range zone of the weekly expected move between 406 and 404.70. As you can see, it came down and back-tested this resistance turn support zone near the 390 area. And on this 60-minute chart, we notice there is a multi-distribution profile from today's price action with a huge low volume zone between 399 and 397, and also the price close in the upper range of today's price range, and the POC is in the bottom third of the range. This tells me to be on the lookout for potential pullback to the 397 area if price cannot establish value and acceptance up above the gap fill level. And if the price can establish value and stay above the gap fill level above the 401.45, then look for a move toward this upper range of the weekly expected move near the 406 to 404.70. Now, if the price pull back and cannot stay above the 396.75, then look for the gap below to get filled and backtest the resistance turn support level near the 390 area, and keep a watch for possible move toward the lower range of the weekly expected move between 385.50 and 382. Looking at the daily chart of the QQQ, we see that it dipped below this resistance turn support zone near the 296 and 299 and bounced back above it today. As it stands at the present, it appears that it wants to move toward the upper range of the expected move near the 314 to 312, which is also in confluence with this potential resistance zone near the 312 to 318. On the 60-minute chart, we also see today's volume profile has a double distribution with a large low volume zone, and the POC is at the lower third of today's price range, and the close is at the upper third. Also notice the close is near the composite point of control. If price could establish value up near the close, then it could be headed toward the upper range zone of the weekly expected move between 314 and 312. If it is unable to establish value near the close, then look for the price to pull back toward today's point of control near the 302.40 and test the lower edge of this balance area. And if it dips below this balance area, then look for the gap between this resistance turn support area and the next balance area below it to get filled. Then keep a watch for the possibility of a move into the lower range of the weekly expected move if this VPOX near the 394 area get tagged. Now, looking at the daily chart of the Russell 2000 ETF IWM, it is tagging the upper range zone of the weekly expected move today and attempting to break a potential resistance zone between this 181 and 183.50. If it moves above this resistance zone and past this upper range zone, then look for the potential resistance zone near the 188, 191 to get tested. And looking at this 60-minute chart, we see that there is a VPOX up at 187.92 above the upper range zone. So that could be the next target if IWM move above the upper range zone. Also, we notice the profile look very similar to the SPY and the QQQ volume profile. It also has a double distribution and a large low volume zone. And the POC is at the lower third of the daily price range. If we see IWM pulls back, then look for today's point of control to get tested. Then watch for potential gap fill from today's gap near the 179, which is also near the point of control, this VPOX and the high volume zone. If it breaks this high volume zone, then the next potential support level is this VPOX near 175.80. Now let's take a look at Apple. Apple is scheduled to report earnings tomorrow after the market close. The expected move for earnings based on last Friday's close is 162 on the upside and 146 to 144 on the downside. And as of today's close, the market is pricing in a move of plus or minus $6.40, and that puts it at 163 on the upside and 150 on the downside, a slight upper shift. Looking at this daily chart of Apple, we see Apple bounce off this resistance turn support zone near the 161. So if there is a continuation move from today's FOMC rally and after tomorrow's earnings report, we could see Apple possibly move up to this 162 and possibly move up to the next potential resistance zone near the 163, and that would exceed today's upside projection of 163 for earnings. On the 60-minute chart of Apple, we see there are a couple of point of control in front of these this upper range zone. These could pose possible resistance, and they are located at 158.30 and 159.50. If Apple reports disappointed earnings or give weak forward guidance, then it could move down to fill the gap near this point of control and also this resistance turn support zone. And if we could not find support from this zone and dips inside of this high volume zone, then look for Apple to move into the lower range of this expected move between 146.35 and 144. Now let's take a look at Amazon. On this daily chart, there's a huge gap near the upper range zone of the expected move between 133.50 and 131.20. And also it appeared that it had bounced off near this lower range zone yesterday. And today it got back above this resistance turn support zone near the 118. And the expected move on this chart is based on last Friday's close. And on this 60-minute chart of Amazon, we see it is currently sitting inside of this high volume zone. And the upper edge of this zone is near 125, and the lower edge of this zone is near 119. There's a VPOX near the 118.43 and 108.92, and a composite point of control near 110.12. If the price of Amazon starts to pull back, then watch these point of control to get tagged along with the lower range zone of the expected move. On the upside, look for the upper edge of this high volume zone near the 125 as potential resistance. And if it could break above it, then look for the upper range zone to get tagged between 133.50 and 131.20. Now, as a final note, the option market is pricing in an expected move between 113.50 on the downside and 128.50 on the upside as of today's close. So there's a slight shift lower on the upside target. Before I end this video, let me just show you this chart of the S&P 500 cash index. Here I have highlighted the 2 days following this year's FOMC meeting announcement to see what were the price actions leading up to Friday's option expiration. In January, we did not have an interest rate hike, so it ended the day of the announcement lower, but it ended the week on Friday higher. In March, we have a 0.25% interest rate hike, and it ended the day higher and also ended the week higher. Then in May, we have a 0.5% interest rate hike and ended the day higher than ended the week lower. In June, we had a 0.75% hike and it ended higher on the day, but ended lower on the week. And today, in July, we had a 0.75% hike and it ended the day higher. So will we end the week lower? Similarly to the May and June rate hike announcement. We'll see. Now let's see what the E-mini S&P 500 future, the ES, tells us. On this market profile chart, we see there is a poor high and a set of single print from today's price action. The upside scenario for the coming day is for the price to move up, take out this poor high, and also fill these single prints up here. And for the downside scenario is for the price to come down and fill these single print and come down and tag this point of control and then work its way down to these point of control and pull low and also the single print below this 3900 area. I know it is not a black and white picture on where the S&P 500 might be headed. It never is. The market does not make it that easy for us. In some instances, we can say it is starting an uptrend. Then in some other instances, it is pointing to heading lower. But the main thing to bear in mind is do not try to wait for the bottom or wait for capitulation. Let the market lead us. In some of my previous weekly S&P 500 videos, I have already pointed out some of the internal has shown us capitulation has already occurred. But that doesn't mean a bottom has been made. So watch the internals to see how they react when the next low is being made and see if there are signs of capitulation. If not, then that could be the low. But in the meantime, trade what is in front of you. Don't get hung up on how the market could go up with rising interest rate, higher inflation, and slowing economy. Since you already know all these things, you don't think the market already know these things as well and have already priced them in? So tell us what we don't know. In other words, focus on what might happen, not what most, if not all the market participants already know it has happened or will happen. Be sure to smash the thumbs up to help me promote this video and let me know you find the contents to be useful and informative. Thank you for watching and stay safe.